Hello, and welcome to Woody's Weekly Wisdom, episode number 31, where we're looking at this rather, what would I call it? Very emotion driven is the best I can come up with at short notice, but very emotionally driven headline designed to obviously attract the eyeballs, which it's done. I've had a look at it, and I'm going to go through what it's telling us in today's weekly wisdom. And this one says, we'd all be screwed. The one thing saving Australia from economic devastation. And the reason I wanted to talk about this one today is not necessarily to beat up on the article, but more so to reinforce what we've been saying or what I've been saying on these weekly wisdoms for some time now when it comes to the economic scenario that we're facing and the conflict in the data that is being reported in the media versus what is happening on the ground. And often there is a distance between the two. And so here we're talking about economic devastation. We'd all be screwed if it wasn't for this one thing. And millions of Australians are in real financial strife should one saving grace disappear. There'll be devastating conditions for all of us if this one thing disappeared. And I'll tell you what that one thing is in a minute. But let's go through a little bit of the article before we get past all the ads and all that garbage. But what this article is actually telling us is that, and again, something I've been talking about for a while, is we've got a huge number of people, hundreds of thousands of homeowners who are paying a mortgage at a fixed interest rate that is about to roll on to interest or off interest only and on to principal and interest and off those historically low fixed interest rates. And that is going to cause a whole lot of pressure. And we're seeing it. This article is now starting to tell us that the data is starting to tell the story that we've been talking about as potentially coming. Now, if you're somebody that is in this scenario, if you're watching this and you're someone that is in a scenario where you're coming off a historically low interest rate into a much higher one, and that is going to put financial pressure on you, the one thing that this article describes that is going to save us, is the saving grace, is that your best interests and the bank's interests are actually aligned. That mightn't make sense. I mean, they're out there to make a profit, absolutely. But given that a lot of their profits are driven from homeowners, from mortgage owners, they can't afford as such for you to trip over your mortgage. So the saving grace that this article talks about is the fact that banks are literally, words they've used in this article, bending over backwards to help people. Now, I know there's going to be examples where people are too far gone, unfortunately, and hopefully that's not anybody listening to this weekly wisdom. But for those people where you can see that this is going to be a shorter term problem for you, then I highly recommend that you pick the phone up and speak to your bank. They will do a lot to help you out. So this article talks about people getting holds on interest periods, all types of different things in ways that they can support you. There's even talk in one of these where they're offering you, cash to sell your property. Now that's probably for the ones that I was just talking about that are too far gone. But where it looks like a little bit of a reprieve will take the pressure off you and will let the short-term other issues play out, and then you get back into a more normal cycle, they will fall over backwards to help you so that you don't fall into default on your loan, because they need you. They want you and they need you as a customer and as a mortgage holder to drive their profits. And their balance sheets are reasonably strong purely by regulation, So they're going to go out of their way to help you. But what we're seeing, and this article talks about it, and something that I've mentioned many times on these weekly wisdoms, is that we're hearing in one part of the media that property prices are still rising. And I've been explaining to people that that is predominantly because there's been less properties on the market. Well, we've now got some data, and this data, at the top of the article, it talks about the number of, I'll come back to the property data. At the top of this article, it talks about the number of phone calls being made to the National Debt Helpline. And that in September they went through the roof, and for the first time ever, mortgage stress was the number one reason for the phone calls. Apparently, it's not normally in the top 5. So that's what that top half of the article talks about. And the calls are coming from New South Wales, Queensland, and Victoria, which is no surprise because we're the most heavily populated areas. And it talks about that these calls are an indicator of the stress that people are under when it comes to rising interest rates. So that all correlates with what we've been talking about on these weekly wisdoms. That as people move off these low interest rates, there's going to be a lot of mortgage stress. So that all makes sense. And although it's not pleasant, it is expected when you go from less than 2% to almost 7%. That is just going to be the case. So as I said earlier, get on the phone early, hopefully not to the National Debt Helpline, but to your bank, and get them to help you out. Maybe they'll give you a reduction in interest rates. Maybe they'll give you a pause in payments. Maybe they will put a pause on interest on your mortgage for a period of time so that you can get under control. So as it says here, the banks are bending over backwards to help you, and avoid that economic disaster. Because what that economic disaster looks like is a whole bunch of properties being sold under duress, which means, and unfortunately, us humans pick up on these indicators when the real estate agent puts a property on the market and describes the property. And it will say, looking for a quick sale or urgent sale required, things like that. Words that might look like they're trying to entice you in as a buyer, and they are, but they also are an indicator that the seller is in serious need to get out. And what does that do? Causes property prices to fall because sales are being made at lower prices to just get the deals done as quickly as possible so that people can settle and pay out their debt and free up that or overcome that mortgage stress. So what we're seeing is an increase in the number of people who are under severe mortgage stress, and that people are falling behind on their repayments. So we're up around the 1% level, which is less than what it was during COVID, but that's a very, very different scenario when, during COVID, there was lots of people who just weren't even getting paid. We're not in that scenario, and yet the number is increasing to 1%. So that's an indicator and something we need to be watching. And people are relying on all these different sources like buy now, pay later and credit cards to manage day-to-day spending, which is not great. So there's some numbers that it goes into about what we're seeing in the number of calls and the increase from 12 months ago to now. So, it's a 25% increase from 12 months ago. So that's significant. The other thing that this article tells us, and this is where the data and I guess the media will catch up later, is the number of homes being listed for sale surged in September. Now, depending on who you talk to, that'll be for a couple of reasons. On the positive side, it'll be because it's the start of spring, and the start of spring means time to sell properties. It's a general habit that we have, that in spring we take advantage of the warmer weather and all the flowers and all that type of stuff, and our properties look better, and so therefore there's always a surge at the start of spring of people looking to sell their properties. That's looking at it from the positive side. Looking at it from the negative side, that surge is because people can't afford their mortgages and they have to sell. And so there's a little bit of it's going to be a little bit of wait and see to see how that plays out. But that is clearly an issue that we've got a large number of properties that have surged onto the market. We'll have to wait and see if that is just the spring effect or whether it is more and more people having to sell because they're under distress. It goes on and gives you more and more data about all of that type of stuff. But ultimately, what we're looking at here is we've got a large number of people coming off fixed interest rates onto the higher variable rates. We've got a surge in people calling the debt helpline, and we've had a surge in properties being put up for sale. Now, like I just said, that could be the spring effect, but I think more likely it's going to be the fact that the people are forced to sell because they're under mortgage stress and they're going to have to get out. So the rest of the article just explains more and more about how so many people are on the brink, and that, like I said up front, that if the banks were to get play hardball in this scenario, we'd be in a much different position than what we are. So the balance that the RBA has got to do is between inflation and rising interest rates and this pressure that people are under. I'm reasonably confident, without being overly confident, that the RBA is seeing and hearing about the mortgage stress and knows that if they were to raise interest rates again to artificially use the sledgehammer to bring inflation down, they're going to cause a lot more pain than what they really want to. So we really will keep an eye on all of that. The article continues on, and this is an important part. It's talking about the fact that the middle class are under a lot more stress, and something that has happened in America a lot, and now we're starting to see it here in Australia, where people earning over a six-figure income are making these calls about needing help with mortgage stress and all the rest. So it's not just what would normally be the lower end of the socio-economic demographics. We're now seeing that slide into the middle class, and that's the last thing the RBA or the government needs, is for mass selling that would lead into a whole lot of flow-on impact. So it's going to be very interesting to see what happens over the coming months. Very interesting to see what the RBA does. But my one thing is, if you are one of those people that is under distress, pick the phone up and speak to your bank as soon as possible. And if you're somebody who is in a position where you could be in a buying perspective, then I think you're going to be seeing some opportunities in the property market in coming months, because there's going to be a lot more properties out there, and we're going to be, there's going to be some people looking to sell, and prices will be, potentially falling a little more rapidly than what they have over the last 12 months. So keep your eye on all of that, and keep coming back to the weekly wisdoms, Woody's Weekly Wisdoms, and our Facebook and YouTube channels, Facebook page. We're here to help you navigate your way through this process and manage and grow your money effectively. And knowing what's coming is a big part of knowing what your next step should be in your plan to grow your wealth. So if you want to know more about how to do that, click the links down below if you're on YouTube. Leave me a comment if you're on Facebook, and we'll reach out to you and let you know how you can get started with managing and growing your money effectively. So have a great week. I've got a meeting to go to, which you just saw, and I'll see you again next week. Cheers.